Welcome to Risk Matters, the insurance podcast brought to you by DWF and your global guide to the latest trends and issues in the insurance and reinsurance industry. Join us as we explore topical issues, emerging technologies, and the innovative strategies that are shaping the global future of insurance.
Welcome to Risk Matters, the insurance podcast from DWF. I am Franco D'Andrea, a partner in DWF's global risk team. As listeners will know, this is our second podcast focusing on energy insurance. Last time we recorded an energy insurance podcast in the spring of 2024. We felt then that we were living in a turbulent time, but I don't think it's controversial to say that 2025 and the opening of 2026 have raised the levels of turbulence to a new level. But in the words of Francis Bacon, the original Francis Bacon, he that will not apply new remedies must expect new evils, for time is the greatest innovator. And where better to find new remedies and new innovations than in insurance? And with that, I'd like to introduce today's guests for the podcast. Ahad Khalid, who is the global product leader for Power at Allianz Commercial. Welcome, Ahad.
Thanks, Franco.
And Myles Sunley, the global head of natural resources claims at Allianz Commercial. Welcome, Myles.
Thank you, Frank.
I should say that I found that Francis Bacon quote in my preferred old-fashioned way by looking it up in a hard copy Oxford Dictionary of Quotations, which in my view is a small win for humanity. But on that subject alone, we've seen significant growth in AI since our last episode, which in itself is driving a new and prolonged energy demand. Whilst energy was front page news in 2024, that has only increased in the interim period. And with that in mind, one thing we noticed in our previous episode was that whilst we had lots of people tuning in who were part of the energy insurance market, we also had a number of listeners who were part of the wider energy market or worked in the wider energy market. And so to which we felt we'd kick off this episode with a bit more information about what it is and where insurance fits in within that process. So with that in mind, I'd like to start off, Ahad, by asking you a little bit about Allianz and a bit about your role within Allianz.
Sure. Well, thank you, Franco. For the listeners, Ahad Khalid, I'm the global product leader at Allianz, and my role focuses on power and renewables. Allianz is a massive conglomerate, financial services conglomerate that has various different entities. One of them is Allianz Commercial. Myles and I work in that and are part of that. And within Allianz Commercial, we have different product towers, one of them being natural resources that is headed up by my boss, Anthony Vassallo. Under natural resources, we have 4 different sub-products, one of them being power and onshore renewables. I look after that globally as the product leader.
Thank you. And Myles?
Yes, I am the global head of natural resources claims for Allianz Commercial. So my role is to oversee the handling of natural resources claims, both from a technical perspective and from an outcomes perspective, one might say, to make sure we are going about things the best way we can for our clients. That involves working with Ahad on the power account. It also involves all sorts of insurance-y type things like reserving and procedures, processes, etc. But I think in a nutshell, I am responsible for our natural resources claims offering.
Well, we're going to come back to some of those points, but Ahad, I know you've had some time working in the Middle East,
Yep.
And I know that's a topic that we wanted to touch on, at least from the outset, which is in particular the Middle East and what's known as in insurance as the catastrophic or cat losses, particularly natural cat losses.
Yep.
There's certainly been an indication that in recent years there have been increased cat losses in the Middle East. Is that fair? And do you think that reflects what we knew about the Middle East beforehand?
That's a really good question, and the Middle East is on everyone's mind right now, based on what we see and hear in the news and also in the world of renewables. I would like to give you a little bit of background about the Middle Eastern renewable energy industry. Up until 2000, so we go all the way back to 2010. In 2010, the amount of installed capacity that was there in the Middle East for renewable energy was 1 gigawatts. Now, for the listeners who are not familiar with this terminology, 1 gigawatt is 1,000 megawatts. Now, what is a megawatt? 1 megawatt can power 150 households for one day, right? So that if you do the math, you can extrapolate it and see exactly what 1 gigawatt meant. Now, mind you, the Middle East consists of, depending on how you actually define Middle East, it consists of more than 15 countries.
Yeah.
So in 2010, they were at 1 gigawatt, right? Today, if you look at any statistic, it's very difficult to measure because everyone uses different pinpoints. But the Middle East is roughly installed capacity today. It's operating at 30 gigawatts. So exponential increase in the amount of renewables in a part of the world where back in 2010, the word renewables just wasn't feasible because the cost of drilling, the cost of producing 1 barrel of oil in the Middle East is the lowest in the world. So why would you then go towards renewables? But the leadership in the Middle Eastern countries made a conscious decision just based on the global dynamics that energy transition is the way to go. And today they are one of the fastest growing renewables markets in the world. So their annual, as per statistics online based on IRENA data, IEA data, they are growing at an annual growth rate of 24% in solar, wind, and battery energy storage.
Yep.
These are the 3 particular areas where they are growing significantly. So there are a lot of reasons why that is happening, but one of the main things, and Myles alluded to it earlier, is energy transition. They have embraced the energy transition wholly. So that's the background, the history of where Middle East is. Now, we all know that the Middle East geographically, majority of the terrain is desert based. There's a lot of sand there, but then there's some parts of the Middle East where there is some mountainous terrain as well. And historically, not a lot has existed in those areas from a commercial building standpoint. So what's happening now is contractors, manufacturers, builders are going into places where things never existed before and are building these sites because the governments are allowing them to. They're getting subsidies to do that. And lo and behold, they are encountering natural catastrophes. Our data, as per our Allianz risk consulting colleagues, and I'd like to give a shout out to some of our colleagues, Michael Brook, Rohinton Irani, who have shared this data with us, which shows that from 2010 up until 2050, predicted data shows that the baseline natural catastrophe activity has not changed and is not going to change significantly. So why are we seeing more renewables losses then? Well, we're seeing more losses because this is something we call the Texas phenomena. And the Texas phenomena essentially is we are now building things in places where nothing really existed.
Yep.
So now we are capturing that data into our systems and saying, oh, this is now a Nat Cat zone. This is the primary reason why we see the increase in the number of losses. To give you an estimate, in 2024 alone, natural catastrophe losses globally were at $145 billion. 10% of that was coming from the Middle East.
Yep.
So it's very difficult to say that this is a changing environment. It is in one way, but the weather pattern, as per our data and the analysis it shows, hasn't changed.
Does that mean that there was no data points to begin with?
Not that we were concentrating on.
Yeah.
They were there. The meteorological societies of each of these countries in the Middle East, particularly focusing on the Gulf, had captured that, but we were not whether we call it pure ignorance or the fact that we just did not relate NatCat activities to that region, we didn't concentrate on that.
Yeah.
There's one, whenever we thought of Middle East, we did think of one natural catastrophe, and that was sandstorms, for the obvious reason that we're building in the desert. But we'd never thought of flood. So in 2024, nearing 2025, the biggest natural catastrophe loss in the Middle East was because of flood.
Yeah.
Now, rain in the desert, it doesn't take much to guess that, but it does happen.
Yeah. And so, looking ahead then to other locations where there might be a lack of data sets, at least in the initial phase, is it? Hence, my earlier question was, if there is an opportunity to, let's say, we try and replicate the growth that happened in the Middle East in a different location, does having the data sets from the Middle East now and the lessons that have been learned from the Middle East, do you think that will help, say, your parametric team or other parametric teams be able to work out where that might be going?
Absolutely. And I think that's exactly what our teams are doing. They are taking the data that we learn. Losses are an opportunity to learn from what we shouldn't do going forward. That has been the mantra of insurance, all the way back to 300 years. And our teams now, with the help of AI, are using that data to consult with clients and saying, okay, this is what we've seen. If you build in areas where the recent meteorological data and past meteorological data has not been analyzed properly, it's there, but it's not. And this is where we should alternatively build. The challenge with that, Franco, is that governments, and particularly regulators, need to provide the incentive to build there. And unless that happens, there's an inflection point where we see financiers, lenders, and insurance companies are not agreeing because the lenders are not, because the state is not providing those guarantees.
Yes. And on that, you mentioned very clearly there the value in understanding from a loss scenario what can then be brought into the underwriting scenarios at a later date. Myles, discussing cat losses, we know you're an expert in sometimes in infinitesimally small fiber optic cables and the like. In some respects, you might say, well, is there any crossover, a large claim involving something microscopic and a large cat loss? From your perspective, managing a claim like that or handling it, what are the differences?
I'm tempted to say there are none, but there will be some. I think ultimately the cat loss, you are working on a larger palette. It is more obvious what happened. The cause is clear to see often, whereas the smaller, more, let's say, a subsea loss, a cable, for example, the what went on with a cable is a far more complex question and harder to pin down. So that is a key difference. But in terms of addressing the claim, it still comes down to the same approach that one has of working your way through it with the client and the adjusters. So in that regard, it doesn't really change anything. I think what we do see, to try and develop this out a little further, for example, the NatCat events, if you imagine an installation is engineered to be able to withstand a certain degree of rain and hail, etc., that isn't necessarily true of when it's half built. So we often see problems whereby trenches are flooded by a passing rainstorm that would otherwise have been subject to the drainage that's been put in, etc. So, like I said, the actual cause of it is a lot more obvious. The problems can be more widespread because it hits the technology, the project on a construction claim at its worst, really. Hopefully, when things are built and installed, they should be able to withstand more of that, but also it's easier to replace components than it is to start again. That's the issue. Although the remote locations do present further challenges.
I wanted to come back to the remote location, but while we're here, we've discussed already some of the vast quantity of data that there is in relation to both on the claims side, but also on the underwriting side as well. And I'd just like to ask, Ahad, if I start with you, about is it when you've got the data or you're trying to gather the data, is underwriting something new like that? Is it a scientific approach? Is it an art form? Where does it fit between science and art?
That's a brilliant question, and I think that's one that's been asked at universities throughout my career now, whether underwriting is a science or an art. And I think sometimes the safest way to say is neither. So, no, it is definitely a mixture of both. Because underwriting, for the longest time, Franco, if we go all the way back to Edward Lloyd's, right, we see that it all developed, underwriting risks, marine risk predominantly developed because of a need. All right, a need that was there at the time. And throughout history, the insurance market has evolved and seen that every time there is a risk that needs to be solved, underwriting evolves. It has never remained the same. Science operates on known factors, and without quoting Donald Rumsfeld, known unknowns as well. But at the same time, art evolves. Art takes into account perspective, takes into account time. So that's why it is a mixture of both. Underwriters today definitely don't operate in the same way that underwriters did back when I started my career in 2007. We were very manual-based underwriters. I mean, you would probably know this, Franco and Myles. We were still using fax back then, right?
I'm not quite that old.
Yeah.
No comment.
So fax was still available, whereas underwriters today are using LLM models, right?
Yeah.
They are using AI to determine how do we underwrite and take a risk onto our book. So it has changed. It has evolved. Very difficult to point in either direction, but I would say that the best underwriting decision comes from respect and acknowledgement of both the science and art.
Yeah. And it's a judgment call, I suppose.
Absolutely. Yeah.
And Miles, I'd love to ask you the same question on dealing with a very large loss. You're leading it. Where does that fit between science and art for you?
Yeah, it's a good question. I think the answer is when claims handling is done properly, it is both.
Yeah.
I think one as a claims adjuster needs to understand exactly what the problem is, what technology are we looking at, what has gone wrong, and how all that happens, so that we can then step back and look at the policy, which is also the science element. One needs to analyse that. Of course, you would know, analysing the contract.
That's an art form.
That's but it's words on a page. And how does one fit with the other is very much the technical side of things. But then we have to remember we are dealing with clients in a real world, with a real business, with a real problem, and a balance sheet and profit and loss account that it affects. We have to find our way through it. We put ourselves forward as an organisation to say, we are here for that moment.
Yeah.
Well, that moment is now here. How are we delivering? So that is where the art comes in. There is really, there's a need to understand the threshold required for an insurance claim versus, for example, the threshold of knowledge of exactly what happened in terms of, obviously I'm drawn towards the engineering and technology side. I can get into that for a long time. But I recognise that there is a level of detail that becomes superfluous. Yeah. And that's the perfect balance between the art and the science, I think.
One of the reasons I was really interested in the question was because I've got two daughters. One wants to be a singer, the other wants to be an artist. And I said you could do both in the insurance industry.
Yes.
But Miles, you mentioned earlier about remote locations. I'd really like to explore that a little bit further, because we've all seen, I think there was a particular video going around LinkedIn a couple of years ago about a wind turbine blade being taken up a mountain on the back of making some what looked like impossible turns going up a mountain. So that is a phenomenal feat of engineering, of skill to get these things into the right location. But my question is, what happens then? And what does that mean for both on the underwriting side and on the claims side when these claims do arise? Miles, could you start off on that one?
Yeah, of course. I think it causes tremendous problems. When a project is being constructed, the logistics of how to get all the components there are well thought out.
Yeah.
They're thought out long in advance. Transportation methods are thought through, roads are constructed, schedules are drawn up. Even the example of the blade on the impossible journey, that requires a particular vehicle with a particular rotatable rear axis.
And a driver with a particular skill set.
Precisely, and clearing the roads and obstructions and etc. So all these things are done long in advance. They don't start construction until that's all figured out. When there's a loss, none of that applies anymore. So to a certain extent, it's getting back to square one, as we talked about earlier. It's easier to do something from the very beginning in this instance because you can plan it all, versus trying to do half a job later to repair is very difficult. So getting equipment and components to the location for the repair becomes costly and challenging, and that affects the insurance claim. Labour is another concern.
Yep.
If you have a large project, you can plan ahead and people can arrive and work and then leave. But to do a smaller job, partial, even if it's a large repair, it's a partial project, that presents challenges in terms of assembling the labour force that you need. So that becomes a problem. All of these things can be fixed and resolved, but they all cost money, and that is a problem. So a further issue I think we need to remember is that I mentioned the construction road, just to pick one example. If that is affected by a NatCat event and is washed away, what do we do then? There are a lot of claims, particularly for mountainous hydro claims, where the first port of call is to fix the access roads, which can often leave us with the question as to whether that falls under the claim or not, which is perhaps, is a wordings issue. But it's certainly, we all recognise, well, without that, there isn't any repair. Otherwise, we're talking about fleets of helicopters, and back to expense again. Just to pick an extreme example. So the locations have a key an influence rather on the losses, just in terms of it may well be there's a good resource there, but it's an awkward place to get to if you need to change out something or fix anything, and etc.
And Ahad, on the underwriting side then, is that something that is at the forefront of your mind?
Very much so. I'd like to paraphrase a quote from one of my favorite movies, Top Gun.
We've all seen it.
Absolutely. And the quote that I'd like to make is that in the insurance, we're in the business of writing risks that our balance sheets can cash. If you've seen the movie, you know where the paraphrase occurs.
Yeah.
So I think there are two examples that I'd like to quote here, publicly available examples that you can, that people who are listening to or watching this can Google. One is the Gansu wind farm in the Gobi Desert between China and Mongolia. This is a 20 gigawatt wind farm, onshore wind farm that is spread across the desert. There's nothing like this out there in terms of size, scale, and anybody who has ever watched either one of David Attenborough's shows or Top Gear knows that the Gobi Desert is not really a very friendly place that you like to, get lost in. So building something of the size and scale that you wouldn't even see in the offshore world on land presents its own challenges. How do you underwrite your way out of it? So that presents the underwriters with new questions.
Yeah.
Again, quoting another movie, where we always talk about contractor experience, right, or contractor training or availability. But training is good, but nothing beats experience, right? You cannot beat that. So finding contractors who have experience in building in remote desert locations with mountains and all sort of terrain, it's not very easy. So we assess based on those challenges, and then we also look at how do you get spare parts into these places. Because the number one challenge we have in renewables, particularly because they're very catastrophe driven and prone, where do you get spares from?
Yeah.
Right? How do you get blades in? We just talked about this example about putting a blade up through a mountain. Now, what if that blade does collapse? What are you going to do then? Would we have the same availability? So those sort of questions go into our underwriting process, and then we decide how we should mitigate that risks, because they can open up Pandora's box if things go wrong.
Yes.
And we have not anticipated it or have not assessed it properly.
Yeah. And we've spoke about things going up the mountain, but what when they need to come down. Yeah. And I think we're focusing this discussion much more on renewables, something which we all have experience in, but there is not yet much experience in disposal or decommissioning per se. And I'd like to get your collective views on decommissioning in particular, given that we know there are some studies already about decommissioning of, say, wind farms that have not even been constructed yet. So fantastic foresight to look ahead. I'm just keen to know from an insurance perspective, where does that fit? Usually you'd have the construction stage, the operational stage. To be thinking about decommissioning already, does that require new products, or does that require a new way of engagement with your clients?
Well, thank you. That's a very good topic, Franco. And there are already topics around or products around this that have been alluded to in the market. One of them is CAR, or car in reverse.
Yep.
All right. That's been talked about a lot in the market right now, which is essentially decommissioning construction product. It's not new, but it is new for the renewables world. When we talk about decommissioning, it is very important for us to differentiate between the different renewables because they all have different decommissioning risks. For example, on wind, when we talk about wind decommissioning, pretty much all the components in there, particularly the electrical components, are recyclable, but the blades are not.
Yeah.
And the disposal of blades is where the biggest challenge occurs because we're talking about blades that are meters long, right? Some of these renewables wind farms that you've probably seen, they are as big as the CN Tower in Canada. So what do you do with those blades? number of countries, particularly Denmark, have come up with some very good examples of what to do with blades. They've used that to create bus shelters. The EU is coming up with laws now around what we should be doing with regards to recycling these blades or making alternative uses out of it. But then there are other countries in the world where you would just dig a big hole and you put the blades in there. It's not environmentally friendly.
Yeah.
It definitely does not assist any of the ESG goals that we're trying to achieve.
Yeah.
And then you go to solar, all right? Solar is another one where similar things happen, but the recyclability of solar panels is much higher than wind. Solar usage, etc., is also very, very conducive to a renewable environment. Batteries, I think, is the one where you can make the most use of recyclable materials. However, we haven't seen many of those cases sort of taking place because the world of battery energy storage is not as old as wind or solar.
Yeah.
So there's a different risk parameter for each of these different technologies. And currently, the only legislation that is out there that I'm aware of, at least, is the EU that is working on it to try and ensure that we have a very systemic and a healthy environment to try and put these things to better use after their end of life, rather than just digging a big hole in the ground and then putting it in there.
Because that's often one of the big counter arguments to renewables that you see.
Yes.
Is about what happens post first in the construction phase, but what happens post.
Yeah.
Myles, from your perspective, does this feed into claims now, or is it a future concern?
Both. I think it'll become a greater concern as time goes by. But at this stage, certainly how we dispose of damaged components is a concern. It obviously is a claims cost. It isn't, to be honest, a huge claims cost, but it's certainly there. It's sort of what I refer to as a potential nuisance factor, and I don't wish to belittle it, but the reason I call it that is because it's one of those questions that often comes up in a claim, and you say, well, this is a fundamental about whether we paid this cost or not. And it's not by any means the largest head of the claim, had a claim in there, but it's certainly it's a real drop anchor moment, which is unhelpful because it then potentially it just becomes a stumbling block for the wider conversation on the more important parts. So it is one of those issues which is probably has a greater influence than one might initially realise. I say it will become a greater problem later because the older a component gets, the less chance there is of any reuse, etc., and the harder it is to dispose of, generally speaking.
Yeah.
But that may well be counteracted by, as Ahad mentioned, the legislation now where disposal has to be included or doesn't have to be. There is encouragement through legislation to include disposal and recycling in the actual design. And there are companies, Siemens are looking at it. One of their entities, I might have done them a disservice there, but they are looking at a fully disposable or recyclable turbine blade by dissolving it in acetic acid, essentially. But the EU Waste Directive that I had mentioned is hugely important. It applies across the whole of any material in the EU. Essentially sets up a pyramid of reduce use in the first place, but reuse, recycle, and dispose is actually the very last option. So in terms of decommissioning, if we look at oil and gas as the parallel, staggeringly, something like about 90% of an offshore oil and gas platform will be recycled.
Yeah.
It takes a lot of time and effort to break all these materials down, and there are economics involved, etc., but they do it. So when you think of the size of these things, that's really not very much stuff that's going into the ground. Most turbine blades, when they are recycled, get up to about 80 to 90% already. Solar panels, the same, depending on whether they are thin film or silicon. But they are recyclable. The problem with it is it's cheaper to buy a new one and throw the old one in the ground. And that is not necessarily limited to renewable technology. I think that's true of any consumer product.
Or most things these days.
Exactly. So it is generally, the renewables industry, I think, is part of that wider, certainly the EU efforts to steer people away from that, to steer the world away from that. So there will be a period, I think, when we are dealing with the old technologies, the older blades, for example, particularly in terms of what we do with them. But then we'll get over that hump, and I think in years to come we'll be dealing with those which can be readily recycled. So we mentioned the EU directive a lot. There are probably people thinking, but we're not in the EU. We aren't. But we haven't yet replaced all the laws. So the EU waste directive of 2008, I believe, is still current on our books in the UK, on our legislation. There is a newer one they passed in 25, which reduce, reuse, recycle is now labelled something else, but the concept is the same. That doesn't apply to us. But in general, we are still very much in sync with the rest of the EU. So, and given that most of the developers, certainly for offshore wind, are European-based, I think we can expect to see those new technologies being used in British waters.
Yeah. One thing is fascinating about this is the engagement that there already is from insurers, because I suppose one way to look at it would be to say, well, and we're going to come on to talk about annual renewal processes and that sort of thing, but in one respect, if the insurance market is seen as being reactive to the client, purely reactive to the client need, then why are we considering decommissioning now when that's something, it's a future, it's a tomorrow problem, say for the claims examples you mentioned, Myles. But I think it's really interesting that the amount of engagement there is now from the industry about decommissioning, and the fact that, frankly, we're talking about it, I think is a helpful perspective.
Yeah, absolutely. You mentioned new products, etc. Decommissioning's something obviously close to my heart, having spent a bit of time looking at it. But I had mentioned the reverse well car policies, etc. They are needed. There is, certainly for offshore wind, of which we have a lot in the UK, there is a requirement to remove from the seabed, the continental shelf, anything you put in. We are not yet at a fully developed industry focusing specifically on wind technology. We are for offshore oil and gas. But so a lot of the technologies exist already and methods and approaches, but they will need adapting. It's easy to cut monopiles and platform legs using water jet cutting. Slightly harder to do that same concept, but slightly harder with an offshore wind monopile because of the size. But it just requires somebody to have an economy of scale where they'll develop it. So there is going to be, in time, a lot of work that needs doing. Whether we may even repower and put bigger turbines on some of these foundations, possibly, but a lot of them I think will have to come out. We don't have a product for it. In the oil and gas world, it's less pressing because there is more money available within the oil and gas companies to pay for this, and they anticipate it. They put the money aside, there's tax breaks, etc. The economics of offshore wind, I am told repeatedly by clients, and that's not to belittle it, I do think I do know it's there. The economics are far more narrow, tighter. So I don't know if they are as able to make these provisions as the oil and gas world does. So in which case, there may be an appetite for an insurance product. Because the one thing about decommissioning is when you can cost it, you can plan it, you can schedule everything, like a construction project, but it has more that can go wrong. If after 25, 30 years, the particular component you are looking at to remove isn't in the condition you thought it was going to be, because no one's looked at it for 25 or 30 years, you are in a fundamentally different ballgame. There are classic examples, again, oil and gas, of companies that have struggled and heaved away at casings in oil wells that were just nowhere near the condition they thought they would be in. And the cost goes up. I mean, this is aside from dropping things and having to pick things up and weather and all of these other things. The actual state of the technology, it can be a fundamental difference. So I think in an industry that is looking at tighter margins, there may well be an appetite to look at whether they can protect against that with insurance.
This is a very good point that Myles has just raised, and I'd like to just emphasize on this. The project life cycle of a renewables project versus an traditional oil and gas project, what Myles and I come from that background, is very different. In the renewables world, we're talking about 25 to 30 years for wind and solar. In the oil and gas world, much higher. So very different life cycles, very different problems, which is why we're talking about this now, because the first wind farms that were built in the 90s are now approaching their end of life.
Thank you for listening to Risk Matters, the DWF Insurance Podcast. We hope you join us again soon for future podcasts in our series.